Momma-san, can the markets, can the traders take on the BoJ like they are trying to with any kind of success when it comes to the yield curve control?
No, I don't think that there is any meaningful chance for the investors to beat the BoJ, because the BoJ's intention is very clear. Mr. Kuroda and other officials reiterate that they will continue yield curve control whatsoever, because there's good reason. One, inflation front, even though we already have 2.1% inflation in April, still it is not sustainable because wage rises are still far short of the what is consistent with the 2% inflation. But we need to have 3% wage rises constantly, but we only have 1.5% wage rises, which is far short from the sustained level for the 2% inflation. The secondary, there is a growing concern over the economy, global economy, and also supply chain problems still there, and also imagining increasing level of the uncertainty over the Ukraine, other events. So I think there's good reason for the BoJ to be more concerned about the downside risk to the economy. So there's no chance that the investor will beat the BoJ in terms of the speculation over the shift in yield curve control.
Momma-san, on that front then, the short yen has been one of the easiest and safest bets to make over the course of the last 2 months. So if what you're saying is true, the BoJ does nothing, the yen continues to weaken, at what point do you think that the MOF is going to have to step in? Is it 140 like some people are saying, 145, or do you think they can just let it run?
Well, two things. One is that whether yen continue to slide, I think that is still open question, because as a matter of fact, today yen strengthened because of the global concern of the economy. So at this point, already Federal Reserve tightened monetary policy to a significant degree, and also other central banks also on the same boat, which actually are causing a lot of concern over the global economy about the slowdown of the economy, which is actually setting the dollar pressure on the market. The secondary, even though the yen continue to slide to 140 or something like that, still, as far as it is gradual and it is still regarded as consistent with fundamentals, there's no good reason for the emerging finance to intervene, because among G7 or G20 officials, there is a strong agreement that interventions are not only at the time of very exceptional circumstances, and 140 at this time, I don't know whether that is fairly regarded as exceptional given the fundamental of the economy.